All right. How's everybody doing? Welcome. Let's get the video screen share going. There we go. There we go. Let's get the chat going, recording going. How's everybody's week been? Happy Friday. Jonathan, wait, get to the chat. Ladies and gentlemen, today I started step one of a childhood dream, and that is to get my pilot's license for a helicopter pilot's license. And we kept rescheduling because of the crazy weather in Nashville between the ice storms and their hurricanes and all the things. We kept rescheduling. Then I was out of town, and then, it is what it is. And so today I finally got to go up, and wow, what an exhilarating experience. A little bit scary, but it's pretty wild. It's very, very interesting. So step one, the whirly bird. That's right. So it's been a great week. It's been amazing. Type a 7 into the chat pane if you were at Miami and you are fired up. It's been about a week now. We have some amazing stories that came from that. And most of you know that part of why we do live events is for the face-to-face. And you can do Zoom all day, every day, and see people remotely, but you can't get the high fives and the hugs. And we had quite a few comments from people in Miami that said that's the first good time I've had, since COVID started, or first hug I've gotten since COVID. So pretty touching to be a part of that and to hang out with some of you guys. I did get to meet the legend in person, Joseph Musso, legendary Musso. So that was amazing. And yeah, it's been an amazing week. Kind of been on a high all week. So let's jump into the markets. But first, let me double check, make sure my recording is on, and it is. Good, great. And you guys can see my screen, correct? Type a 1 into the chat pane if you can see my screen, if everything's coming through loud and clear. Okay, perfect. Lance says he likes to fly helicopter as well. Went over the Grand Canyon. Nice, cool, man. I'll share some of my dreams with you with you guys a little bit later, but I took Svetlana, which is now the first lady of RLT. I took one of her dreams classes. I think it was like November, December last year, at the tail end of last year. And one of my dreams was to get my helicopter pilot's license. And you have to put things in action and be intentional to make things happen in your life. They don't just come to you. You have to go get them. And yeah, I actually have my dreams on my phone, and I was sharing with Svetlana last night that, hey, guess what? I get a helicopter lesson tomorrow. And yeah, it's been amazing. So let's talk about the markets. You guys don't want to hear about helicopters all day, I'm sure. So, the SPY just closing at all-time highs, no big deal. What do you say? Look at that on the weekly. Look at that. Amazing moves. SPY, as you guys know, is a pretty good little across the board indicator of the overall markets. I think it's 500, and I think that technically it's 500, but it's 502 or 505 stocks. And yeah, closing all-time highs. No big deal. Nothing to see here. Now, if you look at the Qs, you will notice that we didn't actually touch all-time highs, just barely, but we did close at all-time highs. You guys see that? So here we actually didn't close. We closed here, and you guys, if I was to zoom in a little bit, you guys can see we closed on the Qs at all-time highs. So during all this chop, when you guys were going crazy, thinking the world's going to end, if you just have the proper perspective and take a little bit longer term perspective and just sit tight and follow your plan, like, good things can happen. So you guys see that kind of bounced off this 100 simple moving average, retested a few times, and looks like we're continuing higher. So just a slow climb higher. And if you were to compare this type of move here to this, where this is COVID, as you guys know, the COVID craziness that happened literally like this time last year. The move was so dramatic. It not only bounced off the 100, but it chopped and went lower. So it went far below the 200 something moving average. So if you were to kind of overlay that on here, it would look something like this, right? And we didn't even go down there, right? So just little slight pullbacks. And just a reminder for those of you who like to buy the dip, not to get super aggressive too early, or you'll get run over. And you have to have a decent plan and follow the plan. So those of you who are familiar with pyramid trading or position trading, I typically like to draw some lines that straddle my 100 and 200 simple moving average, something like this. Just the lines when you're learning the strategy don't make as much of a difference just early on. So draw some lines that kind of crisscross and then buy at different levels. So if you were to set this up, you'd be profitable already. Now, this is not an official trade. This is kind of, let's go back 10%, wrong template. So the idea is to buy in legs as the price action goes lower. And for those of you who got in, good job. Thanks to RLT for pointing out that this has happened many times, right? This happens, it bounces off and it continues higher. So those of you who took action, great job. The thing that's so hard to do in trading, and you guys are realizing this, you've been around more than 6 months, is disconnecting your emotions from the dollars. And I'm not sure why that's so hard. For those of us who are robots, it's pretty easy. Jonathan Wage is part robot. I'm part robot. And it is, I would say, it's challenging for the average person to disconnect from their emotions, right? Because if you see that your P&L is down X number of dollars, you automatically think, oh, that's a mortgage payment, or that's a this, or that's a that. And you just have to disconnect it. And the way I think about it, this may or may not be helpful for some of you, but the way I think about it is to think of it like a video game score. And our puppy is right outside my door. But think of the video game like a video game score, right? Where you're up or down. Like, it's okay if you're not winning all the time, right? You have to take some, right? It's part of like learning and just trying to be emotionally, what's the word? Stable or emotionally, that's not the right word. Emotionally constant, something like that. Yep. Just want to remind everyone to just chill out, take a happy pill. It's going to be okay. Enjoy the weekend that's coming up. So Jeremy this weekend is doing a double marathon. This guy's old man knees can't do a double marathon, but I'm going to run for a few hours with these guys, these young guys. They're always pushing me to do more than I'm capable of. But everything's going to be okay. And you guys can see we're already kind of making new highs. So yeah, slow climb higher. So let's see, let me jump into the comments. If you're in companies that have gone down, not gone up in the market, how should you position yourself with respect to the broader markets? Great question, Mo. Let's take a random stock like, I don't know, Fastly. And let's take a look at that. So the way, actually my line's not on here. But the way I think about this is just buying in legs on the way down. So the question is, if you're looking for Fastly on a swing trade, I actually gave recommendations, like some of my coaching clients, this is a good spot to buy. And if you tippy toe in as you go lower, you guys can see my actual lines that I actually have. This is like a second pyramid, but as the price action goes lower, you buy a little more, a little more, a little more. And the idea is that you can lower your average cost on the way down. Now, question is it ever okay to add to a losing position? Yes or no? The answer is only if it's in your plan. That was a trick question. Only if it's in your plan. But what you don't want to do is what most people do is they'll buy 100% right here, and then it goes lower and they'll buy another 100% down here. And then like you kind of get overly emotional about the overall position. So just wanted to kind of point that out. It's Fastly it's one of my favorites. It's actually, if you guys want to take a peek at Matt's 5-year time capsule, We down just a little bit in FSLY, just a measly 20% on that, but overall it's up 10%. Now, a good, 7-8 weeks ago, the overall portfolio here was up a good 37%. And I literally said, I'm expecting at least once, maybe twice, that the whole entire thing will go red, which it did in the last couple of weeks. The entire entry where I purchased all of these shares on December 7th went red. But if you have a bigger time frame than today and tomorrow, I think FSLY will be good for you. If you're trying to make cash flow on it, it's probably not the best one right now. I have plenty of shares in FSLY, and it's also in my time capsule, so I'm kind of doubled up on it. So yeah, FSLY is, I wouldn't say the worst stock ever. There's worse. It is kind of just hanging out below the 200 simple moving average. So for those of you who are new to RLT, the red line here is our 200 simple moving average, and that basically just represents like a long-term support. And so if we close below the 200 and hang out there for a while, it typically is going to chop. And you'll see our moving average, our long-term moving average here crisscross just a little bit. But long-term, it's in my IRA, so whatever happens, happens. I'm okay. I'm okay with it. And you guys, what you don't want to do is get overly emotional. And most people will chase price action higher. So as it's going higher, they're going to buy. And then this kind of thing happens. And then this type of price move, price action happens. And then you get emotional, and then you sell for a loss, and then it pops and bounces and goes higher, and you're chasing your tail a little bit. So I try to think of it like, this is how I explain it to my coaching students is, I'm like, imagine yourself in a boat on a lake, and the water is totally placid, totally calm. And you have a bunch of fishing lures just out waiting for things to happen. And I'm okay with literally being out all day on the lake and all day in the markets, and no orders are triggered. But I'm waiting for things to come to me. I'm not like chasing after fish. And that's the hardest thing for brand new people to do. Those of you who are fishermen, you're right. The idea just sounds totally ridiculous to chase. There's one, let's go get it. But that's literally what happens for a lot of brand new traders is something is moving higher and then they want to jump into it. But it's not the right way to do it. It does take some practice, and you have to be disciplined and execute your plan. But that is, that's kind of the vision, the analogy, the word picture, the insert example here. But that's how I think about it. And I'm okay with going weeks, literally months, whatever it takes to get the price that I want, not as I chase it higher. So on companies like Pinterest, I actually set up collars on this on the way up, but I didn't get all my shares. Same thing with Square. I don't have all my shares, but it's okay. But here, you guys can see my exact plan. If some of you guys want to take a screenshot of that, I could probably share that. But the idea is I want the price action to come to me. I'm not going to wait for it. So what I mean by that is I have open orders at all of these levels. And this is my plan to, if it closed below this level, which is, some of you guys are probably wondering, how the heck do you draw that? So you guys will see like this U-turn that happened previously. So a little bit below that. And the U-turn is just nicknamed pivot, just kind of where it pivot and turn it around. And this is my actual plan. I have open orders at these levels. I do have 30%. So I got filled back here, and I'll go over Momo in just a sec. So those of you who are asking, but I got filled pretty quickly on the first couple legs. And for those of you who are students of the candlestick, you know that that the price opens here, goes lower on this day right here. Like during the day, it opens, goes lower, then it turns around and goes higher. And there for a minute, it maybe a few hours, it looked like death, right? But it's going to be okay. And you're waiting for, you need lower for your rest of your orders to fill. But if you guys can just sit tight and let the plan work for you and not chase things higher, your account, your portfolio, everything will be much better for it. And you'll be in a good place. You don't have to get stressed about down days. You actually personally kind of need down days for some of these legs to get filled. But the idea here on this gang is that I want to know where I'm going to buy insurance if there is a significantly lower move. And that's it. It's just sit and wait. and practice your holding muscles and be patient. So Eric says, I thought you don't like the pyramid below the 200. My lowest level usually is a little bit below. Great question. My lowest level is usually a little bit below. For those of you who have ever put your stop at the 200, you know that you're going to get sucker punched. So it's going to go below and then go above. So I'm just trying to be a little smarter about that with that last level. That's basically all there is. And the levels that you guys draw your lines is when you're first starting the pyramid, the practice of pyramiding is super helpful. The exact specificity of which exact dollar and cents, you'll notice that all mine are even dollars. It's like, I like simple, like, and let's not overcomplicate it, right? But in this level, you guys can see I got filled pretty quickly. This first leg on one day on March 4th last month. Second one, March 5th, almost got my third leg, and then we pop and bounce and go higher. So it's already a profitable trade. And I literally just had open orders waiting. And you do a certain Zen-like state when you have open orders and you're just waiting for things to fill. It's like, if they get filled, great. If not, that's okay too. I'm just sitting out on the lake waiting, doing my thing, waiting for price action to come to me. So let me get caught up on a few of the comments. Ezra, yeah, I'll go over Momo in just one sec. Mo, I think I got your question. So let's go back to Fastly real quick. So in this example, gang, I want Fastly to go lower, right? I have 30% of my shares, almost got this little leg right here, missed it by just a smidge, like 2 centimeters, right? And the idea is the lower the price goes, the more shares you buy. And I'm in here and I don't see anything like terribly wrong with Fastly. It is closed below the 200, but I have this trade actually in my IRA. So I'm going to hang on for a while. For stocks like growth companies, Fastly, I think is a solid company. Just the price action looks kind of like a dumpster fire right now, but it's okay. I'm not in all the way. I need to go a little bit lower first, right? On this. So yeah. Let's see. With Square being much higher now, would you sell them buy back when you hit your pyramid? Absolutely not. I am not going to sell. I want lower. And this is where so I've run several year-long experiments. I don't know if I shared this with you guys, but I've run several year-long experiments in real portfolios and sample portfolios. And you can certainly do that, Michael. You can certainly do that, like sell and then try to go higher or try to buy back in lower. But what happens if it just rockets higher? If it rockets higher, makes new all-time highs, then what am I going to do? Am I going to buy up here and then it sells off and then I'm going to take a loss and then it bounces and goes higher? It's like I'm on the wrong side of that every single time. So everyone has different comfort levels with waiting, but I will tell you, I have made more money doing nothing than trying to micromanage a trade. I will say that again. This on. I have made more money doing nothing than trying to micromanage a trade and trying to tighten the stop. The more I manually try to overrule what I think should happen, the market's just going to punch me in the face. So those of you who've been around a year or longer, you've probably learned that. It's like being the racquetball running full speed towards the wall. It bounces and you smack it. Or so just don't do that. It's pretty simple. It's pretty simple. So, but for those of you, yes, Ezra's right. For bill paying money, you absolutely can sell. Everyone has different account sizes, different stages in life. You absolutely could sell and lock in your gains. I choose not to. And I do have, today would have been a decent day to set up a collar. I was flying helicopters and did not do that today, but maybe I'll get the opportunity on Monday, right? It's like, it is an opportunity. I could take it or pass. It's like deal or no deal. Okay. Diamond hands DeLong. So I feel like the biggest challenge for most of you is just facing your fears. And maybe there's a little bit of discipline just following your plan. But at the end of the day, you're trying to grow your account and you can only take what the market gives you. Like if there's no bites on the end of those fishing poles, what are you going to do? Like chase it? And you don't want to do that. And so when you just have tons, like I have dozens of open orders waiting to get filled, and I can be on a boat, I can be wherever, flying helicopters, doing whatever, and my order will or won't get filled. I'm okay with that. And I realize not everyone's in that position. I don't really think in terms of like paper hands or diamond hands. I'm at a different stage. I'm older than some of you guys. But we're all at different places in our journey. And if you guys can just chill out a little bit and let things work in your favor and be patient, I think things will work out better. It's probably not a bad experiment. Like take half your account, micromanage it, the other half, just let it run and see which half, like, move it into a second account and see which one works better over a period of a year. And I'd be willing to take some bets on which one would work better. It's all about the mindset of just getting over the fears of losing. And if your R is really small, I'm sorry, if your R is really bothersome and you lose sleep, then just go down in R size. I actually used to have a $2,500 R, and I took this is years ago, like 3.5 years ago. And I took a bunch of like 2 back-to-back 15R losing months, and I went back down to $500 R. So it's a pretty dramatic swing. And then I'm back to 2,000. I'm growing it and going back to 2,000. So you get your confidence back and you carry on. Like that's the process of being a trader, the process of being a real life trader. So what about hedging options, Mo? Yes, you absolutely could set up a collar on this. I did set one up a day or two ago on Pinterest. I sold actually it was on this day right here. I have to go back and look at the exact order, but I believe I sold the 80, this guy right here. I sold the 85 and bought the 80. So I sold the 85 call, which means I gave someone else the right to take it away at 85. And I bought the $80 put. So I got super aggressive on locking in gains. So what that does for me is it gives the upside. I'm giving away the upside to somebody else, which is fine. But then I'm protected against a lower move. So as you guys know, it's been a little bit choppy the past 6-8 weeks. Well, that's okay. You guys, I hope you're not hearing any concern in my voice or Jeremy's voice. It's gonna be okay. Everything's gonna be okay. But yeah, that's absolutely how you can hedge with options. We do have a options course if some of you are interested in how to lock in gains without actually selling your shares. Think about that one for a minute. It's hedging with options here. We just re-recorded this whole series, so yeah, pretty cool. Most people think, oh, I gotta lock in my gains. Well, you can use options to lock in gains without actually selling the shares and keep the shares, right? So that's the idea. And also, I did want to mention real quick, we got a couple of questions on this this week. Is for those of you who weren't able to make it to Miami, we do have the ability still, if you want to buy the recordings. I'm told that all the recordings have been posted. So if you go down here to the live stream, if you subscribe to that, you can get the videos on demand. So obviously the event is over. However, if you're interested, video on demand, and you will get an icon that looks like this, live stream. And that will take you to a page that looks like this with, yeah, where I tell my story of being sued and hacked and some super vulnerable stuff. So, and yeah, watch it. It's good stuff. Okay, charts. Back to the charts. Let's see. So this is investing, not swing trading with SQ. So Inga, great question. In this case, so this is how I think about it: is swing trading for me is weeks to months. That's what I consider swing trading. If you're in and out in a day or two, that's kind of like super short swing term trading. In this case, I've held it for a few weeks. which is inside that weeks to months time frame. And you guys will see that we went down, kind of hit a new high. And I'm sorry, not a new high, but we made a high, and it kind of literally just double bottom right after that, right off that magic line that I drew, which is just some random obscure line I drew. But that is swing trading, is weeks to months. You can certainly hold for shorter periods of time, but I would challenge anyone who would be interested in jumping in and out to perfectly time the ins and out on this, where I just have money working for me and I just chill out and hang out, let it do its thing, right? And now some people may not be interested in waiting a month to make a few R's, but imagine having like 15 or 20 of these that are at different stages of maturity that are up a few R's here and there, and you have a bucket of those. That's really, that's like my style. So, yep. Let's run through our quick list of stocks real quick. Let me grab one thing over here. So if we were to take a look at Tesla first on Momo, you guys will see that we took our robots that trade this Traders Post, literally exited today. So we entered here, sold there, taking a small quick profit. Nothing to write home about. It's still chopping a little bit, which is fine. It is what it is. Let's see. I'm struggling with some of the position trades, how to manage those risks on those. I have leaps that are down over 50%. Whatever. So Mo, great question on position trades. Are you legging in on the way down? Or are you buying in level, like predetermined levels? What most people will do is they will go 100% on a candle like that, on where it gapped up and went higher. And that is the worst. That's where you should be taking profits, not buying. And if you're on the boat, like with Matt on the lake, and you have your lures out, you would have caught some fish right here at this level. And that's pretty much it. I'm just waiting for some lower movement. Do I think it's going to go down to 450 and 395? Probably like a 2% chance, but that's okay. It's going to be okay. Yep. I legged in a little bit earlier. Yep. My periods were higher. Yeah. So ideally with pyramids, you can just like straddle the 100 and 200 simple moving average on companies like Square. You guys can see literally where I drew the lines. Fastly is kind of a little bit of a dumpster fire right now. Pinterest. My lines aren't on Pinterest for some reason. Etsy, you guys can see how that works out. But here's what I want you guys, let's just run through this real quick so you guys understand. And then we'll go through our Momo list a little more. So if I'm just drawing lines that cross my 100 and 200 simple moving average at this level, I don't know exactly what's going to happen. I don't know any more than you guys know. I'm reading in the sentiment, but just like you guys, but at this level, I'm in at 10%, right? I'm in. And you guys can see before I set up my levels, this is for you, Mo. Before I set up my levels, I know where I'm going to buy insurance against a lower move, because what I don't want to happen is this. I don't want it to fall off the chart and get filled. And ideally, these pyramids are added. This happened pretty aggressively. I don't normally get several legs of pyramid like in the single week, and no, let alone a few back-to-back days like that. And you'll see right there, boom, I'm in 100%. And my average cost basis on this is, I have to do the math, but somewhere probably around 116. So at this point, I'm upside down on the trade, which is fine. I'm okay with that. I'm not going to get emotional. I'm just going to run my plan. And my plan was buy insurance if we close below the low of this. So as of yet, we have not yet closed below the low, but check this out, gang. If I have 116 average cost basis, right? And we're chopping around, I'm up, I'm down, I'm up, I'm down. Right here at this level, I'm up, right? And I did nothing but set up 4 orders weeks ago and then did nothing. I could lock in the gains now if I wanted to. I'm not going to. But at this level, I'm in all 4 legs. And my plan was to buy protection if we close below that level, and that didn't happen. And again, I drew that line because if you look to the left, you'll see a previous U-turn. I'm like, okay, let's draw a line right there. It's there's no, I mean, it's not it's not rocket science, but it does require a lot of emotional control. Some of you guys heard me tell the story that a few years ago, I looked at what Warren Buffett's portfolio is just as a fun experiment to try to like mentally get over this idea of being emotional with your trades. And every year, Berkshire Hathaway publishes their annual like shareholder with their letter and their reports, and they show how many shares of what and what their cost basis was. So me, being the smart guy that I am, I took all the shares of every Wells Fargo, Coca-Cola, all of it, and put it into a spreadsheet. And I literally just watched how many shares of what and just did the math. And in Google Sheets, there's a function for like, what is the price, like the most recent price, right? It's like I forget, it's a Google Finance function. And it's like 15 minutes delayed, but it's good enough to look at once a day. And I literally saw his portfolio go up and down hundreds of millions of dollars a day. But we have a hard time with a few $1,000s a day. And so I'm like, well, if old guy can do it, I can do it. I don't have hundreds of billions of dollars in my account. Right? None of us do, but we're working on it, right? And so those wild swings, once you feel like, okay, so it's not the end of the world. It might feel like it. It's okay. Maybe I'll cry for a few minutes, but then I'll move on. It's like, okay, it is what it is. I'm going to follow my plan. And that's what I do. Just follow the plan. So, let's see. Yes, with options, it is trickier, absolutely, because what happens, Mo, if it goes sideways I don't know if you have like 9-month leaps or what, but if it goes sideways for 9 months, then yeah, it's not going to be, it's not going to be good. But if it does make a nice pop higher, you're going to like quickly or rather soon, you'll see a nice bump in the P&L as well. So yeah, Mo, do you always buy the same delta, or how do you decide what level, what strike, what expiration to purchase? How do you figure that out? 40 to 50 delta. Okay, sure. January 2022. Okay. So you got what, 6-7 months, something like that left. Yeah. Cool. All right, gang, let's cycle through our quick list, starting with Datadog on Momo, and let's take a look-see. So Momo is our short-term swing trading strategy. And we actually got to teach this live in Miami. And the idea is when these two lines cross, you get a trigger to buy at the close, not the close of the market, the close of the candle. And this runs on a 78-minute chart. And so those of you who have automation running, you are in long on Datadog, and it's just kind of doing its thing. This is where you guys get emotional, is where it chops around. You're like, oh, I can't take a loss. But being able to have a profitable trade and then turn a little bit red and continue higher, I mean, that's part of the normal market swings of ups and downs, but it's going to be okay. Just chillax. It's going to be okay. Just follow your plan. And some people ask about where do you put stops on Momo, and Momo does not use the normal like R strategy for risk management. It does have built-in risk management, but it does not use the R system because you'll see here, if you're in long at this level, it'll tell you to exit, right? So you take a small loss, you enter here, you exit here. So a small loss. So it does have risk management built in, but it is not the R system. So what most people do is they just take the gains and losses and add it against your R. That's really all you can do, kind of to normalize it. So that is Datadog. Next is apps. One of these, actually, this is not on Matt's official list, but it is one I'm watching. So if you look at it on a bigger time frame, and you look at my green shaded area, just kind of going sideways, doing its thing, hanging out, making some highs, bouncing around, just chillaxing, kind of going sideways since February, so the past couple months, which those of you who are super astute traders got some orders open at different levels, waiting for lower price action. In this case, even during the, actually it did during COVID, it did go a little bit lower, but if you look at this, it looks like it literally just woke up like about this time last year when it was around between $4 and $8, and then it just woke up It's like, hey, I'm awake. It's like a little shot of caffeine, I guess. So that is apps. Next on Momo is Pinterest. If you were to take a look at this, be bullish. And our signal to enter that was here. The question I do get all the time is, hey, if I missed it, should I just jump in higher? And what do you guys think my answer is? Come on now, some of you know me. I do not jump in higher. Why? Because I'm sitting on my boat waiting for things to come to me. That's what I do. I wait. I am patient. You guys know? Patient is, oops. Patient is P-A-Y-T-I-E-N-T. Patient. I am patient. I'm paid to do nothing. Now, how many of you guys, that would be your dream job? Do nothing and get paid. I'm serious. Like literally do nothing. Have your open orders and they get filled or they don't. And you just maybe 30 minutes before they're in the market, you do your quick cycle through your stocks. Do I need to take action on anything? Is there upcoming earnings that I need to either decide what to do with? Like, I think that'd be the dream job. And some of you guys are able to trade full time. Whatever that means for trading full time. I only trade 30 minutes a week. I'm sorry, 30 minutes a day. That's it. And I didn't start there. Obviously, you have to put in the time to learn this stuff, but you all get there. Absolutely. So one of the big things that I am a huge believer in is where you're going in life is more important than where you are. And I will say that one more time, where you're going in life is more important than where you are right now. So this is where the sermon begins. No, I'm kidding. So if you're able to think about like what you're doing today and the habits you have today, how that's going to propel you into the future and improve your trading, don't beat yourself up too much. If you had a choppy March or April or February or whatever those months are, don't beat yourself up, because where you're going is more important than where you are. So let's say that you have $1 million account and you're getting sloppy. You're not double checking your orders. You're not, you don't have stops. You're not checking earnings. Like, you're getting sloppy. What can you predict about that $1 million account in the next 6 to 12 months, higher or lower? Lower is what Zach says. Now, why is that? Why is it lower? Because where you're going, like, you can predict where. Now, what if you have a $5,000 account, but you're doing all the right things, right? You're back trading, you're logging your trades, you're doing what you're supposed to, you're checking earnings. You have a $5,000 account, but every week you're getting a little bit better. You're getting your emotions under control. You're doing what you're supposed to. What can you anticipate about that, higher or lower, in the next months, weeks, years, decades? It's going to be higher, right? So all that to say is that whatever you're doing today, the habits you have today will propel you into the future. And I think about it in terms of, I try to think of myself, because I have a software background, in versions, right? So like this is version 7.1 of Mac. And it's the current version is a little stronger, a little smarter, a little more disciplined than previous versions, a little richer than previous versions, but it's got a little more mileage, right? So that's what I think about. That's how I think about it. Is, okay, so I'm going to try to be a newer, better version of myself as often as I can. So for those of you who were able to jump into Square on Momo, I mean, look at this. This is like textbook. Buy at the close. Right there, and we're rocketing higher. Like, it's not hard. It's not hard. Okay, next is TWLO. We got a trigger for that. I guess about a week and a half ago to jump in at the close. And again, we're looking at a 78-minute chart of Momo, which basically just says, hey, buy at the close of this candle. So in this case, if you look up here, the C represents close. 341.54 is where you would buy. People ask all the time, what is this exclamation point? What does that mean? And for those of you who are options traders, you guys understand implied volatility, and the implied volatility chills out a little bit if you're buying calls. And that's kind of what that means. Nothing more, nothing super complex. So when you have a stock that just sells off throughout the life of that candle, the 78-minute time frame, you're going to get a better price for the option if you were to buy a 40 or 50 delta call option for maybe 30 to 60 days. So that's really all that means. But here's a great example of like handling your emotions. Look at this, gang. How many of you got to be honest with me, put a 1 into the chat pane. But how many of you bought right here at the close and then you get back, you're like, oh, break even. I got to be break. I can't take a loss. Can't take a loss. And then boom, you're like, wow, I'm glad I broke even on that. And then look at this. Look what happens. Like, are you sure that was a good thing? And that's what I mean by saying, Matt, micromanaging trades sabotages it. Like I just learned, as long as the trend is green, this green shaded area, I'm going to be bullish no matter what I feel, no matter what the P&L says, no matter, if we have a series of lower highs in a row, I'm going to do my thing. Right. And then you guys can see gap up. Right. And it is what it is. It's not hard. So that's Twilio. Next is Shopify, and shout out to my boy Craig Levine, who literally taught this exact strategy of pyramiding. I didn't draw the exact lines, but the idea of buying shares on the way lower, and it's a trade that's up, decline, spam call. I don't know what, Craig, 14-15%, and we didn't get all of the legs that we wanted when we drew the chart, but yeah, that's it. Let's see. Sorry, I'm getting behind on questions. I don't want to go too far back. You guys are talking amongst yourselves about limit orders and trader posts. Yeah. Okay. Do I look at daily before entering a 78-minute Momo? You are welcome to. My automation does not. It just makes a decision based on Momo by itself. You can certainly, if you're trading by hand, if you're doing it like 2020 style, like manually entering orders, like that's the old school way of doing it. We have like automation now. But yeah, you certainly can do that. Look at a daily chart on whatever it is you want to buy. And here is a great example, gang, when you're not afraid to take losses and you're buying at the close of that candle. There was a short period of time that this candle right here looked like a shooting star. Like, oh, it might be going lower, and then you gap up. And you're like, nope, we're going higher. And as long as this shaded area is still green, we're going to continue to be bullish. So I just want to encourage you guys not to get overly emotional. That's one of the big challenges, and just follow the plan, no matter what you feel like. That's easy, but yet hard. It's like a 1,000,000-mile journey, just one step at a time. So great job for those of us who pyramided into Shopify, but this is on my automation list. I have that in my automated account. Tesla, we talked about earlier, took a small gain, entered here at the close, took a small win on that today. Peloton, you guys look at it, we're bullish, continue to be bullish, even with this, a little bit of selling and chopping right through here, right? The series of lower highs. Even with that, we're still green shaded. Now, could tomorrow go, Monday go lower? Yeah, absolutely. It could also do this, right? And so that's, as long as you follow the plan, doesn't necessarily, what I think doesn't matter. What you think doesn't matter. Market's going to do what it's going to do, regardless of what I think. And that's one of the things you just learn over time. You just get punched in the face so much. You're like, okay, I'm just going to do my thing, and whatever happens. I'm not gonna be afraid to do it. So yeah, Peloton, be bullish currently. And this is Elastic, which I have a position trade on this as well. The automation is bullish. It bought back last week and a half ago. So that's Elastic. And then Roku, look at this, gang. I mean, no more textbook perfect. You don't get like this beautiful of a pattern where you have a few days of selling, or that's more than a few days, handful of days selling, and then it literally just crisscrosses. Normally you get a little bit of chop and then it goes higher, but look at that. Roku, nice bounce for you to look at it on kind of a medium term, higher time frame. You guys know what happened to the tech sector, some selling, and Matt with his little boat and his fishing rods out, little buying pieces. So I got 20% of that. Now, could we go lower on Monday? Absolutely, absolutely could. I don't think it's going to happen, but you guys can see it took a nice little U-turn right there based on just some random obscure lines that I drew, right? So that is Roku. Let's take a look. Let's go back there. Ooh, that looks like craziness. Okay. So Ezra is asking some questions. Sean is asking some questions. Is there anything you look at on the daily before you take the 78-minute? No, that's it. It's pretty much 78-minute. So Momo is a little bit time consuming if you have a list. So what I do is I just set up my alerts. This is literally my actual, why is my alerts not loading? It's not loading all the way. Let's see if I can load it. But I had some, that's weird. My other monitor shows alerts. Wonder why that is. But I had, let's see, today triggered Tesla, which we looked at, Beyond Meat, TeleDoc, and FSLY. So yeah, that's Beyond Meat. So the signal from Momo, this would have been a small loss, says enter at the close of that candle, and it was to take your loss right there. So about a $4 or $5 lower move. And it's okay because not everything, it works, just not all the time. And this is the chop that I was referring to where Roku, you guys see the difference between this, where it chopped around a few times first, and then you look at Roku, just like snapped its fingers and literally just turned around. You don't get anything like more picture perfect than that right there. All righty. So this list, Ezra, is Matt's 15 with 1 or 2 exceptions of things I'm looking at. So apps is not on my official list. I'm watching it. So, and then this is a CrowdStrike. Again, just be bullish. Right here would have been our entry. And again, just like Roku, picture perfect, right? Several days or weeks of selling. If you're not afraid to get chopped up a little bit, you're swimming out in front of the wave, catching the wave as this goes higher, and you don't know what's going to happen. And that's kind of the point. And it just, Momo tells you when to get in, when to get out. It doesn't get any easier. It's pretty simple. Yeah. So TeleDoc, if we were to look at this on a little bit bigger time frame, Jeremy was actually presenting from my computer last week at the retreat, and an alert popped up, buy put options, and the alert, as you guys know, in TradingView sometimes is a minute or 2 delayed, and the options market is not open after hours, right? So it's just the normal market hours. So I didn't get protection until I forget what, I guess this day right here. One of these, yeah. So anyways, I didn't get in until the very next day, but it's okay. It is what it is. NVIDIA, if we were to look at it on a 78-minute chart, what do you think, gang? Bullish. Buy at the close, ride higher. Beyond Meat is just chopping around, which looked like FSLY, same thing. And then Mongo database. So Mongo is looking pretty solid right now for Momo. If those of you, now here's a really good question, is if I miss this alert, let's say I'm on a plane, like not able to put in an order, whatever. If I miss that alert, how does Matt jump in? Well, I have automation, but if you don't have automation, what you can do is put an order, an open order right there. So let's say that the close is 285.75. So let's do it this way. 285.75. What kind of order would I use, gang, to buy right there? I would use a limit order to buy. Now let's pretend I missed that whole move, right? And let's just say a couple of days went by and I missed it. Are you going to chase higher? Or are you going to just keep an open order there for a few days, waiting with your fish hooks, waiting for it to come back to you? And then boom, there you go. You're rewarded. Now, obviously, if you did that, you would have been in, you would have been filled, and you would have been upside down there for a minute, but you're going to chill and follow the plan. Again, it's bullish. So we're going to continue regardless of what the price action looks like. And you'd be sitting right there. That's what it would look like. So that's the only way. If I miss a trade, I will set it up at the place I should have got in, or where it told me to get in. And I'm not gonna, Matt has broken his plan too many times to chase price action higher. So I just want to encourage you guys to just stay disciplined. following your plan. It is hard and simple at the same time. But maybe it's time for you guys to dust off those trading plans and put something a little more painful than, going a day without coffee. like do something like really hard. Like, I'm going to make myself run 5 miles, or I'm going to go a month with no alcohol, no coffee, no something, whatever it is, whatever the craving is, right? You're going to go without something, and something that is painful enough that you don't want to revisit it. Some of you guys know when I first started trading, my plan with Jerremy said, if I break my plan, I have to be vegan for, it was like 3 or 4 weeks. Now that's been years ago. And I accidentally fat fingered an order, and I put in like 1,200 shares instead of buying 120. And I was, my rule said not to lose more than 1 R on a day trade. And I was down like 6, 7 R's just in a minute. I'm like, what happened? I didn't realize I accidentally fat fingered. Well, I'm like, well, that's the end of the trading day for Matt. And I texted Jerremy, hey, it was an accident. And I think he gave me a mulligan the first time, but it happened more than once. And so, how do you know what's a honest mistake and what's a careless mistake? If it happens over and over, then we get out of the honest mistake into the careless mistake range. And so I just said, I'm gonna be going to Whole Foods, and I'm going to get the Daya cheese and the olive oil butter and the potato bread and like all the things, the salads. And I was a vegan for 3, 4 weeks, whatever it was. And it was painful enough that I haven't broken my plan since. So yeah, that's all I got for you guys. Questions. Let me, when Ezra, so your pain would be 1 day without breathing. That would be pretty extreme. Yeah, we don't want any brain damage on that. But again, this is my my time capsule. For those of you that asked about this earlier, just my 5 stocks that I bought. I basically just put in the same like 20,000 into each of the 5, and I bought it at the close of December 7th. And so we teach all types of strategies in real life trading. Some of them are just sit and do nothing for 5 years strategies, which is fine for like retirement accounts. Trying to trade in and out of is like swing trading is a different strategy. Trying to day trade is something else. So we teach all the things. So Ron fat fingered a day trade on Tesla and made an R. So did that, I guess you didn't break your plan because you didn't lose more than R, but yeah, you got lucky. It could have went the other way, right, Ron? Yep. Did I feel healthier? Actually, no, Gil. I actually felt a little nauseous after it. I don't know why. I don't know. I like chicken. I don't have an occasional steak, but I eat a lot of chicken these days. But I did not feel healthier. I don't know why that is. I know my oldest daughter, who's 19, is a vegetarian, and she has to take all kinds of supplements for iron and all kinds of stuff. So you meant to buy 10 shares, bought 100. Yeah, right on. Cool. So tell me what you guys would like to look at on Monday, on Merchant Monday, and I will put it on the list for Jerremy for Merchant Monday. And at the top this weekend, again, we are going to put in some mileage. And thanks for those of you hanging out with us at the retreat and getting some high fives and some hugs in. It was a pretty amazing event. I can tell you guys some tearjerker stories. But we made some difference in someone who was not even remotely connected to the trading group, to our group. One of our guest speakers kind of talked someone off the ledge, like literally, and made a difference in someone's life. So that's really what real life trading is about. It's about enriching lives. Lance asked, where can you automate trading? Great question. There is this cool website you may have heard of, traderspost.io. I will paste that into the chat, and that's where I have my TD Ameritrade. I think I've, John, do I have 1 or 2 accounts? I think I have just 1 account hooked up over there for my automated trading, and it's pretty simple. You just sign up and then connect your brokerage account, and then that's it. You specify what stocks you want to trade and let it do its thing, and then sit back and relax, just chill. Now, I know some of you would have automated trading, then you're tempted to like override it and lock in a gain and just let it do its thing. If you guys want to set up like a separate account, put a little bit of money in it just to play with it with Traders Posts, or set up a paper trading account. Alpaca is alpaca.io, I think. Is that what it, hopefully that's not a bad, okay. Nope, that's not it. What is the alpaca.markets? There you go. So you guys want to just open a free paper trading account and hook it up. Yeah, there we go. So it's basically, it's like Robinhood for nerds. Just say it that way. And you can hook that account up to this and like let it run in real time, like paper trade, let the automation run for you, and just keep an eye on it for a couple of weeks. You can see how it performs. Yeah, that's that. Okay, let's jump into some ticker symbols for Monday. Snow, got it. TIGR, PLTR, TADOC. Let's see, Jonathan, I have, oh, okay, I have two, yeah. Does Momo work through TradingView and TOS with that? Does Momo work through TradingView? So Momo is just like the strategy, and we're using TradingView here. And then you can enable like a house strategy, so to speak, in Traders Posts, which has Momo. I'd have to show you my account login, but yeah, you can absolutely trade Momo in it. And let's see if we have what brokers we work with over here. If it's listed. It's not, is it listed here, Jonathan? Thinkorswim. There you go. Right here. TD Ameritrade, Alpaca, Robinhood, and then future integrations for IB and TradeStation. Yep. So yeah, that's that. Let me add a couple more to the list, and I'll let you guys go. Enjoy your weekend. So Max R, got it. PLTR is on the list for solar. Got it. Snap. What is Snap up to these days? Airbnb. Let's take a look. I haven't looked at it in a while. Snap on the dailies. Yeah. Let's take a look. So if you were to straddle and set a pyramid, you'd be filled on a couple legs. Yep. Probably one or two. And we're going higher. Now, keep in mind that we have earnings coming up in a week and a half or so on Snapchat. So those of you who are in it, decide what you want to do. Either get in or get out. Don't be surprised. Don't let earnings be a surprise event for you. Let's see. We can't have Merchant Monday without Shopify. We got Tesla, Ford. What is Ford up to? I don't think I've ever traded that ever. Maybe once. Ford. Okay. There we go. CRM, which is the Mac Daddy of software as a service company, Salesforce.com. Yeah, look at that, gang. Moving averages crisscross there. Nice, strong candle today. Closing near the, and it is a shaved top. Look at that. Wow. Okay, next is ARLO. Net got it. APPN. Oops, APPN. GoCo. Yeah. I was looking at that just the other day. GoCo. Yep. You guys see my plan on that from a few weeks ago. Got kicked out of that trade. It's okay. It happens. Let's see. DAR. Got it. Specific SFIX. Stitch Fix. Jack Whalen. Yeah, my pleasure, man. Ron says UCTT. UC, is that right? UCTT. Ultra clean. Okay. There you go. Take a look. Yeah. Right on. All right, gang. Any other Arlo is on the list? Yep. Casey, enjoy the miles. It's gonna rain. In Nashville, it's like 80% chance of rain. So enjoy that. Yes. For the weekend. So the squishier and soppier and more miserable, the better for those of us who are trying to build a tough mindset, right? So, all righty, gang. Enjoyed it. Enjoyed hanging out with you guys. Have an awesome, amazing weekend. And don't forget to love life, live life, and trade it, and chillax. Enjoy the weather. It's going to be okay. Have a good one. Bye, gang.